Good morning, folks. Welcome to our daily market snapshot. I'm Subhash Kumar, and here's what you need to know to start your day. Firstly, let's take a look at the market overview. First up, the FIs are bought for 14,064 crore on Friday, and their net addition options indicate a positive outlook for short term. Let's look at the global markets. So S&P 500, Nasdaq, Dow, all closed flat on Friday. That's due to their expiry. They have a 4-month expiry that expired last Friday, so the markets were fairly flat. And the Asian markets are flat to slightly positive. So with crude was up about 2% on Friday. As we head into the trading day, Gift Nifty is pointing at about 30 to 40 points open. However, the real opening may be slightly on the negative side since there was a gap between the futures and spot. Right. So some of the key economic events today, we have India's services PMI and manufacturing PMI coming at 10:30, which is during the trading hours. And at 7:15 today, we have US manufacturing PMI and services PMI. Now, while the Indian data would possibly be a non-event for the market, the US, any dip below the expectation of the US market may affect the global market. While the Fed clearly stated in the last FOMC that the US economy and the labor market is improving, we have to understand it's the Fed's responsibility to avert any turmoil. So they would always stay positive in their statement, right? They would never say, we are in the cusp of a recession. That's something that you can expect Fed not to say. So their job is to avoid that, right? So, the sectorial highlights, rupee gaining the most in the last 3 months. Rupee again strengthened another 17 paise. So this would add pressure on the IT sector again. Remember, a stronger rupee would mean lower payment receivables since the IT firm receives their payments in dollars. Almost 80% of the payments received by TCS, Infosys comes in dollars. So as expected in my Friday's video, we expected Bank Nifty to make a new ATH. However, the markets literally pumped in the last 30 minutes, which almost took Bank Nifty to 54,000, which was a surprise. Having said that, I expect particularly Bank Nifty to recalibrate the massacre it created on Friday. I've also made a video on the difference in futures and spot Bank Nifty, which is in the below link, which you can check to understand what typically it means when that happens. However, let's check similar situations in last 1 month to understand the probability how the market may react to it. Right. On 29th of July, Bank Nifty almost pumped 1200 plus points in the last 1 hour, right, which is similar to what happened on last Friday. So on this day, we had a similar 0.3% difference between spot and futures. And again, on 12th of September, we had Nifty pumped about 2.6% in the last 2 hours. And similarly, we had 0.4% difference in Nifty, spot and futures, right? So on both the circumstances, the following day, we had a consolidation, right? And the difference between the spot and Nifty got recalibrated the next day, which means they came at a similar equilibrium, right? So most pro traders would have taken advantage of the arbitrage between the futures and spot, right? If you want to know what I mean about arbitrage, please again check my previous video. I've explained in detail how pro traders would have taken advantage of the situation. So while the overall market structure is still bullish, the shock created on the upside needs to be absorbed today. So I expect Bank Nifty to suppress until the futures and spot converge, only after which we can expect any further direction from Bank Nifty, right? Technically, if Bank Nifty opens below 53,500, the traders who shorted the spot will square off their position. This may induce volatility for the first half an hour or 1 hour or so. And Bank Nifty may see a minor correction. Minor because still the overall data is bullish, but you never expect how the market may surprise. So if on Nifty, if 25,670, that's the support area. If that's broken, it may extend up to 25,500. But on the upside, psychologically and based on the open interest, Nifty would have a resistance at 26,000. So the trading setup of the day, the market is expected to be negative to neutral. Again, that's due to the disparity between the futures and spot. And option buyers and sellers could wait for the prices to converge before taking any position. And here's one of quote for you guys today, right? Amateurs think about how much they can make. Professional thinks about how much they can lose. So risk management is the most important factor in trading. And that's it for today, market update. Be sure to check back tomorrow for more quick insights. Don't forget to like, subscribe, and hit the notification bell. And you guys have a profitable day. Cheers.